I'm JD Frost, and this is the Accountability Show. Thank you so much for tuning in. I really appreciate it. Please turn on your notifications for this channel, and also like, share, and subscribe to this channel, because we are talking about the 12 steps to laying a firm accounting foundation for your business. And we are on episode 34. 34, holy cow, it's awesome. And we're talking about the 5 pillars of mastering tax strategies. So in previous episodes, we've been discussing tax planning. Tax planning is our passion. It is so incredibly important for you to be planning throughout the whole year. And there's certain ways to do tax planning, and there's certain reasons why we do tax planning. And I would encourage you to go watch those episodes about why we're doing tax planning. I think it's back in episode 31, 30, 32, somewhere in there. But in this episode, we are discussing the why behind the 5 pillars of mastering tax strategy. Now, when we started doing tax planning and I was helping our team to learn how in the world, like, what are you doing? Like, how are you doing this? I had to come up with a system, basically. I had to come up with a systematic way that I was looking at tax returns, looking at specific parts of the tax code, and also analyzing different business owners and their returns. And what were the specific things that I was looking for in order to help them minimize their taxes and predict what their tax bill was going to be. And what hit me is that there ended up being these 5 pillars, these 5 reasons, these 5 structures, these 5 whatever you want to call them, I call them pillars, that we would touch on for each client, that if you found at least one of those, almost one of them every single time will apply to that business and provide a way for them to save money on taxes or predict their taxes. Those 5 pillars are tax planning. The second one is entity structuring. The third one is the tax method of accounting. The fourth is specialty industry tax credits and deductions. And the fifth is captive insurance companies. What those are is in the previous episode. Why they are is in this episode. So why in the world are we utilizing these 5 pillars of mastering tax strategy? The number one reason is because these pillars are the ones that have saved clients money every single year, every time, no matter what. Your tax planning and your ability to do tax planning is going to determine whether or not you pay $5,000 more in taxes this year, or $10,000, or maybe $100,000. The idea of tax planning is to help you save money on taxes and predict what your tax liability is going to be. So when we have a client that has not done tax planning before, that is an immediate tax savings client. I know that I'm going to put money back in their pocket this year. Now, they might not have paid those taxes quite yet, but I'm going to reduce what that liability was going to be. Because with just a little planning, just like anything in your life, with just a little bit of planning, you end up with a better result every time. Rather than being reactive, we become proactive with our taxes. The second is entity structuring. Why is entity structuring so important? Entity structure is so important because the way that each different type of entity is taxed depends on the setup that you have, the structure that you have. If you have an S Corp, a parent company that owns a bunch of LLCs, that is going to enable you to be able to minimize your payroll taxes each year, or what's called your self-employment taxes. It also allows you with better planning for your withholding at the end of the year. It enables you to not have to make federal estimates so that you can keep your cash on a quarterly basis, and then you can make one payment to the IRS at the end of the year through your W-2. Now, all that might sound very complicated to you, makes perfect sense to me. That's why I'm sitting here and you're sitting there. But this is stuff that you can learn, and this is why entity structuring is so important. Depending on the type of industry that you're in, you might want a different entity that owns that business in that industry, because the tax implications are different depending on what industry you're in and the entity that you have. The third pillar of mastering tax strategy, why do we talk about tax method of accounting? The tax method of accounting is a method that you elect on how you're reporting your income and deductions on the tax return. So the IRS requires you to abide by that certain method that you elect. Once you elect that method, there is a number of different ways to apply that method and strategies that you can use towards the end of the year in order to be able to defer your tax bill. Now, eventually everybody is going to pay taxes one way or the other at the end of their life through estate taxes. But throughout the life of your business, you have the ability to defer tax from one year to the next, or you have the ability to recognize that income every single year and pay the tax along the way. The tax method of accounting will enable you to be able to defer or not defer taxes from year to year. So it doesn't eliminate the tax. That's not what we're doing at all. It is a deferral of the tax. The fourth, specialty industry tax credits and deductions. There are a lot of specialty industry tax credits and deductions available to certain industries and certain types of businesses. Why do we talk about those? Why is that one of the pillars of mastering tax strategy? Because those tax credits are a direct reduction of your taxes. Those deductions are a direct reduction of your taxable income. If we are able to find that you can apply for a credit or a deduction based off of a conversation that we have during our tax planning sessions, that is going to minimize your tax bill. So every business has the opportunity to take advantage of a credit or a deduction each year. You just need to know which one to take. That's why it's one of the pillars. The fifth, captive insurance company, does not apply to every single client. It's only to specific clients, specifically clients that make over $250,000 a year in their business, preferably those that make over $500,000 in their business each year. That's where we would apply the captive insurance company. Why would we do that? It is a very powerful tool to be able to allow you to minimize taxes throughout each year moving forward once you establish that company. So why do we talk about the 5 pillars of mastering tax strategy? Why do those apply? Because in my 15 years of working in the accounting world, those 5 pillars have applied to almost every single tax plan that we've ever done. And I've probably done thousands. So keep those in mind. And if you're looking for a webinar to actually see a tax plan being put together, please go to www.starttaxplanning.com and watch that webinar for free. You can even grab the template. Can't believe I have it out there for free, but I want to help as many people learn how to do tax planning as much as possible so that you can do it on your own. If you don't feel like doing it on your own, you can sign up and do that with us on that website. Thanks for tuning in to the Accountability Show. I'm JD Frost. I'm here to help you with your tax planning and your tax strategies moving forward. Thanks for tuning into the show, and tune in to the next episode by turning on your notifications right now, and I'll see you then.